Hello, Face. How are you? Marco, how are you? Arena, Hugo, how's it going? All my trading warrior brothers and sisters. Brock, how's it going? Ren, how are you? Everyone doing okay? Okay, let's take a look around. Okay, have some new messages. So, taking a shot at the short side. Hi, Sensi. Constantine, Ingmar. How are you, Galaxy? Mark, doing okay? Hello to Kenya. All right, so when I look at the euro now, 1950 was a level that I had in mind. Back here, wasn't sure if we were going to continue to, 117-ish. And here we are against some major moving averages here. Uh, Maybe we could get a pullback to 118. Let's take it a step at a time. Dollar bulls would say that we could, break to new lows. And, right now, anything I put on any time starts off to be a scalp. And you know how I feel about partial profits. And you never know till you look in the rear view mirror when you're fading something, if it is the top or just a top. Big difference between the two. And you really only know when you look back in time. So everything starts off as a probe, and I teach probe and protect, P and P. So you probe the market. As soon as you could get to break even stops, the better. Take the risk out of the trade. I still am, Tom. I just, I was talking to some of the traders I work with and talked about, before we had this push down here, that I'd be willing to sell a rally to 1750, which is what happened. I'm not going to get bullish until we take out this level that it failed from. So far, this could be a failing rally. And even if you're bullish, we could still pull back to, 1710, kind of have like A, B, C before we go again. Silver's acting better. It's up 6 cents, but approaching some, it's much closer to the high than gold is. So the gold silver ratio, after having a little bit of a pop, uh, see what it's doing today. We're threatening this breakout here in gold silver ratio. See this? So 68.5 was a breakout. Look how many times we've tested it. Okay, so here, 1, 2, trying to hold it here. Otherwise, it kind of looks like a descending triangle. Could take it back down here. And, what do you think I think is going to happen to the gold silver ratio here? Anyone want to take a guess based on RSI? Yeah. What do you think? Higher or lower? Take a guess. Why? Why, Amira? You guys get all this teaching and mentoring on the house. Wrong. Right. Galaxy has it. So do you use that in your trading, Galaxy? So when you have a confirmed high or low, that it's not going to, most of the probabilities are it's not going to be the high or low, because most markets don't bottom when prices are being confirmed on the downside and the reverse on the upside. Okay, so yes, I'm still negative the gold. Yeah, Canada's been a rough trade. It keeps trying to break out. Yesterday is a perfect example. And then it puts in a lousy day, and you think, well, they're going to attack the 50% level here, Tom, and they're not. not yet. I thought that after yesterday that we might get some follow through to the downside here and take out the 50% retrace, and maybe I'd have a shot to buy it down here. It could still happen. Um, anyway, the S&Ps keep, what a surprise, new all-time highs in S&Ps. Steve pointed out and Blake pointed out this, I think it was 4144 was some fib extension. Peter Goodburn had this area when I interviewed him last week. Next area above it's in the 70s, 4178 or something like that. So, what it's going to take is a turn lower in the dollar to get this correction underway in the S&Ps. So we need the dollar to turn, and not sure if this is enough. I'd like to see it get back above 92. Remember, I was talking about 92 being important support. And then an hour later, I think we got the J&J news and the dollar broke. So I think we're in an important area for the bull case to continue. We can't work much lower. Yeah. Since June 2020 on what, the daily? It has to be the daily, right? Okay. So S&Ps, it has a weaker, I know that it led and it took forever. Remember I said yesterday I had to wait for the Nasdaq to make a new high to probe it. Okay, so that happened yesterday. Okay, so the Nasdaq, look at the Nasdaq RSI pattern, and after this I'm going to turn it over to Blake. See this RSI pattern on the 15-minute? See it here on the S&Ps. Okay, so a completely different look. Here's a 2-hour on the S&Ps under 70. I mean, it's been diverging since you go back to the end of March on the 2-hour time frame. But then you look at Nasdaq above 70. So even though S&Ps led the way currently, markets change and you have to process the information. And now looks like the structure of relative strength is weaker in the SPOOs than in NAS 100.
Hey, good morning, Dale.
Buddy? Hey, buddy.
You were saying that the dollar needs to turn lower for
higher. I mean, higher.
Oh, okay. I was like, what needs to turn lower for the stock market to turn lower would be Bitcoin, but I don't think that's going to happen, at least not right now. And maybe it will later today, but Coinbase is going public.
I thought it was yesterday, but it's today, huh? Okay.
Yeah, it's their direct listing today, and it looks like it's going to be valued at a reference point of $250 a share, and that's about 65.3 billion on the market cap. That's a oh no, I'm sorry. Yeah, that's 65.3 billion, and it should reach 100 billion market cap.
Wow. Yeah. Wish I was a partner.
And that would actually put it within the top 100 most valuable companies in the United States.
Yeah. Okay.
That's amazing.
Top of the market.
I mean, we say that, but is it?
As strong as it is and making new highs, check out the daily RSI. It's still under 70.
But
so I know I teach people about the 3 drives.
Yeah.
And you could recognize the pattern, but I don't teach the trigger on 3 drives. I have to keep something for myself. So it's one thing to recognize a gun, but it's another thing to know how to use a trigger.
Right.
Well, I'm not telling you either, Blake. This is classified information.
Got to keep it the secret sauce. Well,
Oh yeah. If you want to know the secret, it'll cost you $999.99.
So, Stelios, it wouldn't be surprising to see this be the top of the crypto market, with Coinbase going public, and
Pretty classic.
and I know he was joking, but he really wasn't joking, because I mean,
Well, it's like a cult, right? The thing that's what scares me. That's why I will never short it. But it has all the signs of that now.
So let me just say this as far as cryptos go. Cryptos remind me of, and if you didn't live through the day, then you don't know what I'm talking about. And if you said, well, I was alive, but I wasn't really in the markets, well, then you don't know. This is the same craze as, the internet craze, right? It's the same feeling. It's the same. It's just the same. I don't, from an emotional standpoint, from a cultish standpoint, you couldn't convince anybody in their right mind that the internet was, like the internet stocks weren't going to go higher. It was like, no way. But let's figure out what happened, in 2000, 2001. They all came crashing down. But guess what? The internet hasn't gone anywhere. And guess what? The internet's really flourished. You know what I'm saying? So all these altcoins and whatnot, they probably will fall. There's a lot of them that will fall by the wayside at some point. And I'm sure the crypto market will, correct at some point, but you have to be buying dips. This is something that's staying. I don't think it's a craze. I don't think it's a
blockchain. They're moving towards it.
I really don't. So
I agree.
You think about 2000, and I don't know where we're at. I don't know if we're in 1999 or if we're in 2000, Stelios. I just don't know. But I would say that this is very reminiscent of that and all these altcoins. And I look at Bitcoin and Ethereum and Litecoin, and I'm like, man, they are some bullish charts. And I'm 100% on board that this market isn't going anywhere. But there will be a correction. I just don't know when it is. You just have to be careful, and you got to look for the signs. And is Coinbase the top in the market? It could be. And I guess the one, we've just got to watch it. But I'll tell you, I wouldn't want to stand in the way right now. I mean, look at Ethereum. Ethereum looks like, last night we said it's going to 25,000 or 25,000 or 24. Here, let's go to our...
Pretty much every coin chart is bullish at the moment, right?
It's hundreds, not in the thousands.
It reminds me of 99, 2000. I traded a bit back then, not professionally, but I was trading, and it's exactly that thing. Any .com company that was made, it was greeted by, this is the next big thing. And I speak to a lot of people, and they say, I like this coin now. I say, why? Well, it's the one that's really hasn't exploded yet, and all the others are. And having said that, there are coins like, and I have to acknowledge my friend Costas, who is listening. He's been long Ripple, and he said, look, the SEC thing is going to be done, I think. But he said, I know it's a gamble, and I'm taking it. And well done to that. But as long as you know what you're doing, there's huge potential. Have you seen the top today? I don't think so. But I think a correction has to be done. This is unsustainable in the short term.
It might be, maybe. I don't know. Here's the thing. I just think it's extremely bullish. There's no sense in trying to stand in the way of this. And I look, Steve pointed out yesterday, it could probably go to 67, 68,000 here. And, if we're making a wedge, if we're making a channel, Bitcoin could really reach for 75,000, somewhere up in that neighborhood. Let me make sure that's about right. Yeah, roughly. Maybe even 80. But the thing is the market's bullish. This is a real phenomenon. And like I said, in 2000, we watched, and again, this is for those of us that were trading. I was trading aggressively. I actually lost probably about, and I've got the stock certificates to share with you if you guys really want to see them. I'll have to pull them out of storage. I lost about a third of my net worth in 2000. Do you know why?
Long
Have I ever told you
.coms
guys
or
this?
shorting? No, or were you shorting?
No. It had nothing to do with trading.
Oh,
I had invested at that time nearly, and remember, I was 26 years old. I invested nearly 250,000. So I guess it was probably about a quarter of my net worth at that point. I had about $250,000 invested into private internet equities. There's this company. It was a local company here. It was called Visitalk, and I had a hundred some grand with this company. Visitalk was a internet telephony company.
So
That's what it was sold as.
a VoIP.
In 1999, when I purchased my shares of Visitalk, it was an internet telephony company. Do you know
So it
what
was
the internet telephony company that took over the world was?
So it was a VoIP company in essence.
It was Skype.
oh, okay.
It was basically Skype.
Yeah.
And with very poor management. So, and obviously they went out of business, but that was 100 grand I had invested back then, but it all evaporated. It was all gone, right? It was all gone. I'm speaking from experience, guys, but this was the craze. Like, it was a craze, and it is a craze now. And like I said, all these altcoins and stuff, I think there's a lot of them that are going to go away. But I do believe crypto is here to stay. And that's why you have to keep your eyes on like the bigger, you guys will make the decisions who the bigger blockchain technologies are, and, yada, yada, yada. I mean, I think you stick with the Bitcoins, the Ethereums, Litecoins. Maybe there's some other coins that you guys really like out there. I don't think maybe Dog coin is the right coin. I have no idea.
Sure, absolutely. Why not?
But listen,
Coin.
this is real.
Guys, I think we have to think about what the role of crypto is going to be in the future. We have a friend, Paul, who says, what if in the long run, crypto coins take over from fiat currencies? What do you think the chances are of this happening? What do you think the governments allowing cryptos to take over from fiat? I think it's 0%. Because, well, maybe not 0.1%. Because if you have finite supply, the governments cannot function. They cannot borrow more. Right. So I don't think they will ever.
Economies would collapse, right?
Exactly. I don't think. Actually, that would be a great reset if they do that, but they're not going to allow it. So I don't think they're going to do that. So what do cryptos do in the future? That's the question we have to answer.
Yeah, and so and I agree with you. And when we come to the head of that question is probably when you see the major correction, which I don't know where it's at, but I guess what we should probably do is talk some real economy currencies right now.
Just really let's go back to the legacy markets.
Yeah, the legacy markets, which by the way,
what we trade. Legacy.
What we trade. But you know what? I know a lot of us here in our community trade cryptos, and I think they're great trading vehicles, to be honest, because they're not engulfed in algorithmic trading right now.
You don't think so yet?
Really? Seriously?
Yes.
You don't think there are any algos?
I totally disagree with that.
No, I mean, I've talked to a lot of.
I think there is no market more beneficial to have algos than the crypto one, because
of the volatility.
A, because of the volatility. B, because of the huge spreads between different exchanges.
Yeah, a lot of arbitrage.
Exactly.
Yeah, but because of that, it's not your pricing is off, and that's why algos are having a very difficult time writing to them. And that's why a lot of the basic analysis and a lot of technical analysis is really, really very easy to do with Bitcoin for now. You know what I mean? But anyway, that's a whole different story. But let's just say for right now, if you're dealing with Bitcoin, you can look at the lows today. And matter of fact, I think this is wrong. I wasn't watching it at this point. Was this a real trade? I mean, was this a real print? Because it was within a minute, we dipped down to 61.50. I guess we could probably look at a different.
Oh,
exchange.
they learned the silver trick.
Yeah.
Right, Steve? The ghost trades down there.
Yeah.
I'm gonna
It's
just try to
precious
pull up
metal.
Only one guy got a fill down there
Yeah.
after all the stops were taken. Yeah, it's amazing.
I just need to pull up a different feed. Let's
Markets are markets. There's
see that Coinbase didn't see that.
Okay.
That print. So
it was a spoof.
Yeah, a little spoof here.
Spoofing
So that's right.
going on. Yeah.
That I obviously used before. So let's look at crypto and Bitcoin, and just we can make it real simple. That was a bullish wedge. And while we're above, let's just call it 62,000, the previous all-time highs, that's the breakout point. And you don't want to be short while you're below, while you're above that. Pretty easy, right? And let's say that that crypto does form some sort of high today, and it gets, let's just say it, we get some sort of blow off top because of Coinbase. Then I think below 62,000 you need, or not even 62,000. It's below this 57,000. That's where you should, if you're a bull, you need to be worried below that support, right? Because that was the previous channel. You can go back like this, previous channel, and that's going to be the wedge support. And I believe below there it gets bearish. But while you're above that 57,000, roughly, I don't think you should be on the short side. I don't even think you should be thinking about being on the short side, right? Let's talk about, as Dale just put it, the legacy markets. One of the things that I think we should be paying attention to is the S&P is at the 161% extension of the COVID move. This is the highs, 2020 highs. These are the lows in 2020, obviously following COVID. We're at the 161% extension, right? So if you look at this feed right here, and I was drawing, this is not intentional of where we're going. I was drawing this like yesterday or 2 days ago, just kind of showing everybody the 161% extension and, just trying to make a point. But removing that, we are up against resistance, pretty key resistance, divergent relative strength. We are overbought now on the daily chart. So really, really important level of resistance for the S&P. The Nasdaq continues to probe into the all-time high arena. And then also if you look at the Dow is it's stalling, right? And then you also have, really quick, what I did want to point out regarding the equity markets. Oh shoot, where did it go? Oh, here it is. You have VIX that continues to slump. All right. So I think you got to watch volatility. So if volatility starts breaking some of this resistance from the last couple of days, that's when you should start looking at equities. So with all that being said, Dale, what spawned this conversation from earlier is I'm going to say that with the stock market, the one thing that you need to be watching is you need to be watching cryptos, because cryptos are on fire today. You've got this Coinbase, going public. You've got, with it, if it is like what Stelio said, it's a top, because he was coughing, right, Stel?
Yeah, exactly.
If that's truly, let's just say that really does happen, and Bitcoin takes a turn, starts heading back below 60,000, and everybody starts getting a little worried. Remember, Bitcoin and cryptocurrencies, not saying that they're a risky investment, they are viewed as the most risky investment by the market. So if they do turn lower, that says a lot for sentiment. And if they do go lower, volatility should move higher and stocks should move higher, or should move lower. But that's all I wanted to mention about where we're at today. Stelio, Steve, do you guys have any comments about what you're seeing right now? And regarding this crypto move, I mean, I know Stelios, you had a few comments there. Steve, how about you? What do you feel about cryptos here?
My opinion hasn't changed during the past few weeks. I'm monitoring a big ascending wedge in Bitcoin, and I think we're going to see some type of a terminal move and a deep correction lower in cryptos as a likely scenario before we can see more upside. I think the trade now is becoming again extremely overcrowded and extremely popular, and a lot of retail people are jumping on it. So this is the time you should be looking in the other direction.
So your what was it? Your aquarium guy?
Yeah.
That does your fish? He had to be buying Bitcoin in the low 50,000 level. So he's doing all right, right?
Yeah, all of them are doing all right. Even the guy that makes coffee and gets paid 600 euros per month that bought like a few hundred euros of Dogecoin is doing.
Oh, he's doubled his money.
Yeah. So yeah, they're doing all right, but I'm pretty sure they're still going to be holding one. They're not going to be doing all right.
Well, you know that. So that's the psychology of, and this is. I'm just going to explain to you how I've seen it work in the past. You know, when you have everybody all in on an idea like the internet, for example, and like I said, I look at the internet today. Like we couldn't survive. This world would not. This world is the way it is because of the internet revolution, and so
For good or bad.
for good or bad, right?
Yeah.
But the fact of the matter is the internet has blossomed all sorts of industries. It's blossomed all sorts of, it's blossomed all sorts of things. I mean, people wouldn't be able to create so much because of the internet, and that's probably going to be the same for cryptos. Cryptos is going to bring in it's going to usher in a whole new, real industry where people are making money and doing other things and whatever. But the thing is it is crazy. And so when the markets do correct, what happens is people are just going to keep buying and buying and buying. That's how like a lot of treasures are lost is it's hard to recognize when the turn is, and when the turn comes, by the time you recognize everything is
The problem is that this type of emotional markets attract amateurs. And the problem with amateurs, and everybody has experience with amateurs, the best market to see how amateurs function is the property markets. That people, buy and sell without having real experience, right? So I've seen it happen in real life. People buy, an asset like a house, some type of a property, then for some reason prices go down and they refuse to accept it. They refuse to want to sell less than they bought, for example, right? Because sentimentally speaking, the value can't be lower. So I mean, we saw this in action during the financial crisis here in Greece as well. People, needed the money, but they were refusing to sell houses cheaper than they used to cost. So when they had to desperately get rid of them, because of course prices were not going higher, they ended up offloading them at a fraction of the price they could initially offload them.
Yeah.
So the same thing applies to people that are now quote unquote investing, because I don't consider this investing, because the vast majority of the people that have called me or I know that have been buying, they're just buying on the hype that with very little money they can become rich. And you know how this works out, right? I mean, if you're just betting on a dream, because literally they're betting on a dream that, with a very small investment they can become rich. and they have examples like, oh, that guy like got like 10 bitcoins when it was $20 each, and now he's like, you know he has quite a lot of money, for their standards, of course, right? So they think that why not Bitcoin can like quadruple in like, let's say, 3 months from where it is, or even go tenfold higher. But they don't realize that the easy move has already been made, and there is a huge risk to the downside that wasn't there when you just had to invest, let's say, $100 to buy 5 of them.
Are you showing that, Blake?
Yeah, I am, and I know you're bringing. And thank you, Steve, for your thoughts. I know you're bringing in Bruce Wyckoff here, and
Bruce Fraser.
Bruce. I'm sorry, I was just thinking as
Okay,
Bruce
yeah.
Willis.
But I know his focus is on
Yeah.
Wyckoff, and actually this isn't specifically the currency pair that I've been looking at, but this is an example of an accumulation phase of the Wyckoff, and that's why I was bringing it up. So
I thought it was just a coincidence. So anyway,
no,
right.
I know who you're bringing on.
All right.
And yeah, so Steve,
right,
it's definitely a mania as far as Bitcoin goes. But
yeah, absolutely.
Who knows how long it's going to go, and that's the thing. And you kind of got to just I think everybody's in the same mindset. YOLO, baby. You only live once.
YOLO, I'm going to become rich.
Let's get long.
Anyway, it's probably a good time to hit up Mark Yusko for a loan.
Yeah, actually, probably.
What do you think, huh?
Mark's crushed it, and same with Pomp. You bring him on.
Oh,
too.
yeah.
So hey, anyway, I wanted to say, have a great.
Make them partners of
what's
Forex,
that?
and we'll make them partners of Forex Analytics.
How about they'll just come here and just buy us out.
Sell it to them. All right, we want 20 million. All right.
Yeah, they could be like, fine, we'll give you, we'll buy you out because
50 Bitcoin.
Been long Bitcoin for 3 years, so good luck. Yeah. Anyway, hey, I just want to say you guys have a great day, and for those of you that haven't visited our webinar sponsors, please do. Pepperstone Securities, one of the largest FX brokers in the world. Open an account here. You can get Forex Analytics for free for a few months, and then you can be part of our community. And that's where you're going to see all of our, like we have a webinar starting in 45 minutes where we go through live analysis of all the major currencies and get you prepared for the day. We build out this, we have this bias chart that we do every day here. And you can see, all the major levels for all the markets. And anyway, I'm going to let you guys take over. So thanks, Dale. Thanks, Steve. Thanks, Stelios. You guys have a great trading session, and I'll catch the rest of you in 45 minutes.
All right. Thank you, Blake. Bruce, welcome back to Face.
Hey, it's great to be here. Can you hear me okay?
Yeah. Do a lot of people call you Bruce Wyckoff?
It's been known to happen.
You don't mind, do you?
It's not a bad thing.
Yeah, when people call me DJ Gann and Dale Livermore, no big deal. So
it's a good thing. It's a good thing.
Welcome back, Bruce. Do you want to share your screen?
Gosh. Yeah, sure.
And I don't know if you have anything prepared or you just want me to wing it here with you. Okay, you do. All right, stocks march onward. All right.
I brought the kitchen sink.
All right.
I brought everything.
You're a content king, so what's the cartoon saying? Wall Street, stock boom. Okay, beating the drum. I was going to ask you. Go ahead,
please.
No, go ahead.
Oh, I was just going to say about this cartoon is it really speaks to the environment that we're in right now with the financial markets and the economy, because as we all know from a year ago, the COVID low, that the stock market just went on just a ramp. Yeah. And so this is our guy banging the drum. And this is what typically happens, is that you get a launch in the stock market, and then some number of quarters later, the economy starts to reflect the boom that's occurring in the stock market. And so in the last year, you've had a substandard growth in the economy, but you've had a screaming financial markets, and
Okay.
especially the stock market. And now you can see the wagon back there with all the people on it. That's the national prosperity. And we know in the next couple of quarters that we should see just booming GDP growth, and we're starting to see inflation coming back in and so on. This is really pretty typical of the way it happens. And it has consequences for how the financial markets trade
Yeah. So
from
could we
here
have
on.
so maybe what we're going to do is the handoff to the real economy, and that's why people are buying like deep cyclicals and materials and all of
Exactly
those
right.
things. And some of the darlings that got us there begin to underperform. Bruce, is that kind of the
Well,
the
I think how we could portray it is that we're going to be in a rotational market. So what happens is it as the economy starts to mature into its growth phase, the stock market actually will start to show more of a capacity to have rotation within it. Doesn't mean stocks can't go up, but it does mean that they may go up at a less, they're likely to go up at a lesser trajectory, and they'll go up, there'll be more winners and losers. And so,
okay.
which is fun. I mean, this is the way the game works. And so we just have to really just brush off all our rotation tools and, be ready for that.
Could we have a 10 to 30% correction in the interim before the handoff between here, the market and the real economy?
We could, yeah. It's not uncommon to see a correction intervene. We don't have to have that. I think that the Fed's demonstrated that they're, the last thing they want is to have to fix a cyclical downturn. 10% is probably,
The most that
the
we could get?
equivalent of market noise, where 30% would be, I think, really damaging. The thing that, gosh, Dale, it's like you saw my presentation. It's like I can't keep
What?
up with you. So you're, I have just a bunch of different charts, but one
Yeah,
of the
good. Because I
chart,
was going to ask you, everyone, the different methods have different lines in the sand. And
yes,
I'm kind of like, people are saying as long as we hold 37, 3,700, we're okay. So
yeah,
I was wondering what your methodology would say that here we're the point and figures, beautiful work. I'm just going to let you explain it.
sure.
But,
So this is a chart that I publish these charts up on a program I do on stockcharts.com called Power Charting. It's entirely free. You can either watch it live or you can watch it on YouTube. And
okay.
so I brought these up to date, but one of the things that I've found very interesting here is, and of course in Wyckoff, we use horizontal point and figure counting to give us price objectives. And
Right.
here I'm actually using this point and figure technique, which is as old as markets are. So point and figure horizontal counting is a very old methodology, but it's incredibly powerful. And so here you can see that there's an accumulation phase that
Yep.
developed in interest rates
Right.
back in 2020. And of course, this is all in preparation for this big booming economy that we're going to have, because we know that a booming economy demands money, and the cost of money, as we know, is interest rates. So I did this point figure chart back at that time. I think that the date on this was January 4th, and it was just completing what appeared to be the accumulation phase. And so I had effectively 3 segments counted here. You can see also this distribution and redistribution count, both counted down into this interest rate low. But at that time, it looked as though interest rates were going to start to go up. And in fact, this is where they are now. They're right in the middle of the first objective range. And so this would be in this range would be the area where we would expect, call it a pause. There are two higher objective ranges that are flagged here. One is like 2.14 up to 2.52%. That's the B range. And the C range goes as high as 3%. So now here's the cautionary tale here. This chart on the left is actually just a line chart of interest rates. This is 10-year yields. You can see what in fact actually happened, and I put a red line where we are now. And so here you can see this was a slide I did a while back, but you can see that when interest rates started to go up, they just went vertical. And so here we are into that area. And so this is actually prices. I did the same work on horizontal counting on prices itself. And you can see this is where we are now. We're in this first objective range at around 130, 133 currently. And I suspect that we'll stabilize rates here. Now, what are the consequences of this? So the consequences, so here's the 10-year yields on top. Now we're looking at this is 1986, this is 1988. And so this is a period that looks an awful lot like what we just went through, which is, look at this accumulation area for interest rates.
Interesting.
And so this has a family resemblance to the current situation. And then there was just a vertical launch in rates into the fall. Well, here is the, speaking of the fall, a pun, because this is the S&P 500 and this is the 87 crash.
Yeah, you know, the interesting analog. And what's interesting about it is now people are conditioned that higher interest rates are bad for tech. You know, it's all about yields, bad for gold.
Sure.
And if you look at the charts you're presenting right here, because I lived through this, rates, yields were going up, the dollar was under pressure, and the market kept going for quite some time, a term called disintermediation, until we got to a tipping point. And so it killed a lot of bears before the crash because they saw the outside markets. Go ahead.
No, what you're saying is spot on. And so here, this might be the initial lift. And here we are sideways, as we currently seem to be doing in the current market situation. Here's the difference between now and then. Interest rates were much, much higher back then. They went,
the base was 7%, right?
Sure. And here they are over 10.
Yeah.
And this is on the 10-year. And so interest rates were much higher, but also stock valuations were much more moderate. And so even though they were high on a relative basis, and it was a big uptrend in stock prices into August, it was, you had very high rates. And I think part of the issue here is not just how high rates are, and of course they're quite low now, but also how fast they go up. And so I believe that the speed at which rates go up can have a destabilizing effect. And so we have to be aware of that. So the thing that happened into August and October is that we had tremendous deterioration in the internals in the market. And I am not really seeing that happening yet. And so, and it may not happen at all. And so that's the thing that I'd be looking for, is I'd be putting my tape reading
like AD line. I mean, in Nasdaq, at new highs, we're not having confirmation with the advanced decline, are we?
No, and those are the
only one.
Yes, and that could be part of the too. That could be part of the rotation, because the rotation I believe that the rotation is into the value and the more small cap segments of the market. So I'll just show you here, just so that you can see the current environment. You can see here's the base. Look at the family resemblance to that 86, 87, 88 period.
It's amazing.
And then it really is. And now you can see the very fast rate at which rates are going up. They've gone into our first target zone. So we're just going to be patient with this because as we saw, and you pointed out, the stock market can still go higher into the face of these rising rates. And you can see this launch.
Yeah, it did for months. And I was going to ask you about when you look at the parallels between the two markets, the fact that we have low rates is how people are going to rationalize. I mean, you talk about a big move to 3%, and people will still say then they'll rationalize it. They're still very historically low rates.
Yes, no
When
question.
instead of putting it into the reference, well, you know, they're low rates, but what kind of service on the debt? The size of the debt compared to what it was. So, yeah, I'm interested in what you're thinking here as well on the yields with your point and figure. Do you think we could have a pause and pull all the way back to the breakout about 1%, Bruce? Or
I
not
believe
that deep?
I believe that. So here's that chart we just looked at.
Right.
And here's where we are. And
Right.
I believe
we just
my
get a flag
sense
here
about is that what happens is, and this is a pretty wide area, but also notice this is congestion over here on the way down.
Right.
And so here we are. I believe that we could see something akin to this over here, and it could go for months and months. And I believe that the stock market, financial markets would be happy with just a stable, staid yield environment.
And so would the Fed.
And so would the Fed. So I think that they'd be happy with it in this area. And as in a quiet interest rate environment, I think would keep the market happy too, generally stock prices.
So, but if this is just the first wave out of a major turn, the Fed isn't going to be happy when we start getting to some of your B and C targets. What do you think they could do? Because people are going to say, well, come on, Fed, you said you weren't going to let rates go up. Who wins the battle? Back then in '87, it was the bond vigilantes that won until the market cratered. Who wins now?
And
Jay Powell or the bond vigilantes?
Well, I think that the Fed's bias is going to be to and I've been doing this for over 40 years, and so I'm really an old guy and I've seen a lot of stuff. But back in the prior days of high inflation, high interest rates, the Fed pretty much did everything they could to ignore the inflation data and just go on with their policy decisions, which was to sort of be profligate, print money, and keep the economy going. So what happens is the Fed becomes focused on keeping the economy bumping along, and they're willing to put up with a certain amount of inflation to make that happen. And so this is the thing.
Yeah, we're almost in the opposite situation. Back then, they wanted to, fight inflation, and they weren't bashful about doing it. And now the Fed wants to cause inflation.
Well, I'm thinking actually the Arthur Burns 60s and 70s, at the Fed. Yeah, and then when Volcker came along, his whole approach was to just crush really high inflation rates, and we're nowhere near that. So I think that the Fed's willing to put up with a certain amount of inflation and maintain their policy stance that they have now. And I believe that they could do that for a long, long time. So that's kind of my sense about how this is going to go. And so and here's the big call, is that after about 30 plus years of falling interest rates, going back to the Volcker era, is that now we're in a situation where we could actually have secular rising interest rates, where this could have been a major low here. We could be looking at just interest rates rising and then consolidating consolidating, rising, consolidating for a very long time.
So we may
And,
have launched a bear market in bonds finally that has been predicted for the last 10 years.
yeah,
That took several stabs at historic lows, sometimes just equaling them and then finally taking them out. But how does are you believers, Bruce, that, the biggest markets out there, bigger than the stock market, bigger than the bond market, is the currency market? Is the dollar the fulcrum of what's going to be coming? And is the dollar going to be the sacrificial lamb along with bonds to keep things going? What do you think?
well, it's it's a really complicated question, and you can't always correlate currencies to what's going on in the real economy. But I do believe that if our economy is the best, one of the best economies out there, and our interest rates are at a level where we're competitive, I believe that the dollar could continue to find a bid. And
Okay.
here's a chart. Now, I'm not a currency person. I apologize for that, because I know many of your people are. But this is a big trend channel, a couple of them, that goes back to 2014. And I believe this was at the beginning of January. I showed this as sort of my look ahead at the year. But
Yeah.
here was the dollar. This is just UUP dropping
Right.
down to the bottom of this channel area. And
Right.
also I had point and figure counts that were fulfilled. This was a distribution count up here. I could probably find that chart. I have it in the stack somewhere. But down we went to this green channel line, and sure enough, we have rallied off of that for the last quarter. And so you can
Okay.
see here that there's been a pretty good rally in the dollar, and also this is coinciding with those rising interest rates. And
Okay. Yeah.
so I believe that rising interest rates could be attractive to the dollar. And now this is a very old chart, December 30th. But
Okay.
this point, here's the distribution count that I took at that time. And you can see that there was a count fulfilled down to this 24 level into the area of that trend line. And
Yeah.
now there's a bigger lower count that goes down to the 2013 area. And so there is the potential for lower prices in the dollar. My sense is that may have to come. See, that's this whole area up here. And you could
Mhm.
rally further before turning this back down and going. And here's the 20 around the area of the lower count, which is this very long-term support line. So
Okay.
there
Well, that
is.
would be another parallel with 87, because the dollar was declining during that. I think maybe that was that around. Did we have the Plaza Accord around then?
Gosh, you're better on these things
Yeah,
than
it's
I
like
am.
Jim Baker, I think, was
Mhm.
Treasury Secretary. But the dollar was falling, yields were rising, and the market kept going until it hit a tipping point. But
I do
that was
remember.
part of the mix of the 87 crash, was
Yes.
a deep dollar decline with rising yields, which is, kind of the opposite of, what's happening now. Is the dollar likes higher yields and gold doesn't like higher yields. But don't marry that correlation, because you could have higher yields and the real rates, the nominal rates, are different than the real rate. And if the inflation rate is above the nominal rate, you could still have gold go up while yields are going up,
And this
right?
is exactly why, Wyckoff is a tape reading. We call
Yeah.
it a tape reading methodology, where
Yeah.
we basically look for the evidence in the way that these markets are trading for our entry and exit points, and also point and figure for objective ranges and so on. And so this is a chart that I started to follow. This goes back to your earlier question, actually, but this is a chart that I started to follow back middle of last year. This downward line, this is a relative strength ratio, really, between the VTV Vanguard Value ETF and the QQQ, which is really large cap growth. And just to make the point, and this chart really doesn't even go back to the beginning of it, the theme of the last 10 years has been that growth has been really dominant. Now, I've gone back and I've documented, these were all periods in my career. The early 80s was the first growth boom that I was personally involved in, and this was early 80s. IPO boom.
The low was in the stock market. I think it was 760 in the Dow in 1982, and I think that was in August low that we had for the launch of this generational bull market. But it was 1982, I believe.
That was the very early in my career in the financial industry. And so at that time, anybody that got involved in stocks was considered to be just like a nut. It's like, what are you doing? Real estate's where the action is. And here I am getting involved in the stock market, which I loved. I mean, I had studied in graduate school. And then here we were actually in the early stages of a really booming growth phase.
All right, what was your first job? What was your first job? Did you go work for a wirehouse at any time, Bruce?
Oh, that's where I started.
Okay.
I started at Dean Witter as a retail stockbroker.
Okay.
And it was the best kind of training I could have had. And I had these remarkable mentors that helped me get my career started and really taught me how to be an institutional broker.
I was a runner on the floor and out trade clerk for Dean Witter on the CME.
Oh, that's awesome.
And you know what was great about Dean Witter is they put him inside of Sears, so you could go buy IBM and a washer and dryer at the same time.
Stocks and socks.
Yeah, that's right.
that whole thing started around the same time that I showed up at Dean Witter, and Dean Witter was a fine company, and
it was,
and I loved working there, and it was a terrific place for me to be to start my career. But then I went over, as we say in the industry, I crossed the street, became a portfolio manager, and started to manage large portfolios, pension funds, retirement accounts, and things like that. And so that was my whole career, really.
All right, I want to know what you think of this. We have a very insightful audience, and Sanse is saying one dissimilarity is back in 1987, there was no cryptocurrency or strong adversary like the euro as opportunistic challenges, which U.S. financial market is facing now. What do you think?
Well, I wouldn't disagree with that. I do think that there's, money is fungible. It really moves around all over the world now. Currency markets are a lot more. There was definitely a lot of trading in a lot of areas. Commodity markets had a huge following back in those days, and so
and the Deutschmark was around. It was it was as much of a competitor to the dollar as the euro because it was the strongest part of Europe. In fact, you could say the euro is mainly Germany now too.
Well, and let's not forget that in Japan was having a bull market, epic bull market for the ages that went right into the end of the decade of the 80s.
Yeah, 89. Yeah,
and so
I think we finally just surpassed that high.
Yes, I think that. If you can imagine that.
32 years later.
Yeah,
took a while to break even if you bought the top.
I actually know people that did that very thing, and and advised against it, but I actually could tell you stories, which I'm not going to do.
Okay.
But here is this theme that we're in now, and being a Wyckoffean, you can see this downward line
Yeah.
which I like to try to visualize these phenomena on the charts because I'm a total chart guy. And you can see when the line is dropping, that growth is outperforming.
Right.
When the line is rising, value's outperforming. And we go through, as we all know, long periods of time. Stocks are like fashions. The fashion has been growth for the last
Right.
10 years. And now something interesting is happening here where we've had a classic. Wyckoff has a unique way of drawing
It looks
trend
like the
lines and
yield
channels.
chart.
Yes. And so, well, that's Wyckoff, right?
Yeah.
So it's the whole idea of how do you identify these accumulation structures and distribution structures. And so here, look, you can see the throw over here. This is a big, beautiful distribution structure in 2016 for value.
Yeah.
And then downward we go again. So these just here's another one. And so in this particular case, here we are, we can see this accumulation area and a turn up from an oversold condition because we fell out of the channel on a
Yeah.
climactic surge after a
Right.
long decline, which is a classic bear market conclusion. And
Yeah.
so here is a close-up. Now I'm looking at a slightly different ratio, same story. And that is, this is the Russell 2000, and this is the Russell 2000, and here is the accumulation area. So you can see here's this what we call preliminary support. Here's the climactic surge, 2 climactic lows, automatic rally, and then here's our accumulation area, which looks an awful lot like the yield chart. So, and so here at the conclusion is a spring and a test and the beginning of an important new uptrend. And so here's our uptrend. Here's the throw over. I apologize for all these trend lines, but I put all the big long-term 10-year historic.
Could I get a quick question in, and then we have to wrap it? Do you have a point and figure chart? Forex Gal's asking for a point and figure chart on the S&P and your opinion of it. I know there's probably just no reversals in sight. We're making new highs. So do you have anything like that?
Well, here,
go ahead.
Here is this is a chart that I actually showed you at the beginning of the year when we last met. And at that time, and this is actually the chart November, and you could see here that we were in the range of 3,500. Well, look where we are. We're up. This is the COVID accumulation area, and we are up here within 20 S&P points of the top of this range. That doesn't mean that the market has to go down, but
it's just a target.
It could very well mean that the market has to reaccumulate for another move. Here is a chart of the Nasdaq 100. This is the E-mini futures. My teaching partner, Roman, put this chart together, and you can see here, this count line is around 7,200, and this count line is around 11.6. It's a reaccumulation count. And this chart is actually from the beginning of the year. And I think we may have looked at this chart when we got together. But now look where we are, 13,975, but we still have further to go. And so that is that's a consideration. And then let's see, I think I did another chart. This chart is a intraday point and figure. I love to do those. This is 30-minute data. And this is the area. Now I'm looking at a daily chart over here. You can see this is, look at how much this on a small scale looks like the yield chart we first looked at.
Right.
And so downward slope to it, and then it just completes its accumulation, starts to go. Well, at the time that this was putting in its, what we call a last point of support, we took account 2 phases. And so we have 349, 360, and we have 403, 413 for the whole accumulation area on this 30-minute data. And so that does, and this chart is up to date, which is I think around 340, 60, and right here, 340, 60. So we have still upside potential, and
Okay.
the growth phase is now kicking off and doing quite well. So now let me just show you this one chart. I know we're running out of time, so I'll hurry this. But this is the percent of Nasdaq stocks on the stock exchange, on the Nasdaq composite, that are above their 50-day moving average. So it's a breadth indicator.
Yeah.
And so here, this is the same area that we just counted on the Qs
Right.
right here. And notice this. Now, typically when this line is rising, it shows that more and more stocks are getting above their 50-day moving average
Right.
in the composite. Well, look what's happening here. It's
Yeah.
not rallying, which says to me that at least so far, now I believe this line will start to rally, but that it's lagging badly, which is very unusual. I believe that the rally that we're getting in the NASDAQ 100 is very narrow, and it's the large FANG type, not just
Right.
the FANGs, but all the, the leading large cap growth names are what's driving this rally that we're in. So these are the little hints and clues we look for evidence of that rotational nature to things.
Okay, so the teeth are falling out, the fangs are falling out, may need some false teeth. So
Yeah.
okay, great. You know, you're such a pro at this. So I was going to ask you to do this. So this is where you could find Bruce
Yes.
and learn more from Bruce, and
Rom- yeah.
go ahead.
Roman, my teaching partner at Golden Gate University in San Francisco, when we were teaching now, he teaches an online course of the material that we taught in the classroom. He's a
Cool.
wonderful teacher. He's got a complimentary session coming on 4/19. And then also we do a weekly Wyckoff market discussion where we cover these markets just as you and I have done today.
Yeah.
And we're doing a complimentary session on April 21st. Welcome to join in, and just go to wyckoffanalytics.com to learn more. So
Thank you, my trading warrior brother.
oh my gosh.
Veteran trading warrior brother. You and I kind of go back to the same time frames. Oh yeah, and there's our fraternity
Yes.
brothers.
Yes, exactly. And so here's that whole cyclicality of markets, accumulation, markup, distribution, and this is our, I mean, it's just, this is the whole idea about the tape reading of these markets to determine what tactics to follow, and it's just so much fun.
Great interview, Bruce, and I'm happy to have you now in the regular rotation.
Oh my gosh!
And,
well, thank
you. And I'm going to get in touch with you after this. I want to remind everyone that the Morning Edge starts in 8 minutes. But Bruce, I want to thank you most of all for coming here and sharing your elite. I think it's elite work. So
well, it's great to be with your people and with you, and I look forward to it in the future.
Okay, buddy. So good hunting. May you win in every may all your point and figure charts be winning tic-tac-toe games.
Oh my gosh. Well,
all right.
There it is. It's what I do.
All right, Bruce.
Thank you, dear friend.
All right, Bruce Fraser, everyone, and you could find him on Twitter, and you could communicate with him or go right to his website. Check out his course, Bruce Fraser at RD Wyckoff. Thank you, buddy.
Take care, everyone. See you next time.
Okay, so that's a wrap, everyone. We'll see you tomorrow. Morning Edge in 7 minutes. Adios. And don't just count your X's and O's, count your blessings.